Total non-farm payroll employment rose by 311,000 in February, much higher than 205,000 jobs expected, and the unemployment rate edged up to 3.6%, also higher than 3.4% expected. According to the U.S. Bureau of Labor and Statistics reported today, notable job gains occurred in leisure and hospitality, retail, trade, government, and healthcare. Employment declined in information and in transportation and warehousing.
Now, for more on these stories, let's cross around to London, where we're being joined by Arise business analyst Bode Ososami. Bode, I want to say thank you very much for joining us today here on Newsday. We've just got the U.S. non-farm payrolls data coming in. How will these affect Fed's Chairman Jerome Powell's decision at the next meeting?
Well, there was an upside surprise on the actual non-farm payrolls. It went up 311,000, which was higher than the 205,000 consensus that was expected. But also, the 504,000 was a revised figure. We got a 504,000 revised figure from the previous month. Remember, the previous month was 517,000. The average hourly earnings was 4.6%, that's year on year. Month on month, average hourly earnings came slightly down to 0.2%. That's a bit of good news because higher average hourly earnings will spike up pressures on inflation. Unemployment rate 3.6% and higher than 3.4% last period. Labor participation rate was also 62.5%, higher than 62.4% in the previous period and 62.3% expected. I think the two most important numbers are the 311,000, which is the actual non-farm payrolls for February, which is an upside surprise, though lower than revised to last month's 504,000. And of course, the average hourly earnings, the wage growth on a month-on-month basis, which thankfully is down 0.2%. My thinking is that this, of course, is slightly much more hotter than was expected, especially the non-farm payroll employment. But there will be some respite that we could get in terms of the wage growth slightly going down. But you can see that the employment is actually firming up much more, significantly much more than the market had expected to see. My thinking is that this is going to result in leaning more on the 50 basis points hike scenario. Remember, a month ago, almost nobody was expecting a 50 basis point hike from the Fed. But as at yesterday, the chance of a 50 basis point hike on March 22 was up from previously 31% a week ago to now at about 80%. Obviously, if we do get the CPI data, which comes out next week, Tuesday, showing a figure that's also higher than the figure that we had the previous month, I think that was 6.4. We expect that to go down to 6.2, but you have to wait and see what we get. But if the CPI metric is also on the high side, then it's almost a given that 50 basis points is where the Fed will go when they meet on March the 22nd.
And Bode, in Nigeria, the elections are being postponed by a week. What are your thoughts on these impending financial costs?
Well, postponement of elections heightens uncertainty, which isn't good for sentiment, number one. And we're already seeing what many see as a delicate democratic transition. Nigeria has gone through a lot recently, and the polity is already quite volatile. The economy is somewhat under strain. Although if it produces a fairer outcome, some would say the price is worth it. But let's not forget the now reversed decision to demonetize high-value currency bills stalled the nation's estimated 220 billion informal economy. You just reported the challenges that Nigerian Bureau is facing with Heineken and some of its businesses. So manufacturers actually told reporters that the shortage of Naira notes had caused a drastic reduction of more than 25% in sales of locally manufactured products. So you now add another source of pressure. INEC had budgeted 355 billion for the 2023 elections. Any delay implies, of course, that the execution costs will be most likely higher than that. Not to talk of costs arising from the suspension of economic activities and movement restriction. One study that was printed, I believe, in Business Day put the extra cost as between 1 to 2% of GDP, which comes conservatively to about over $1 billion and potentially over $2 billion. So we'll wait and see how this moves. There may be good reason to delay the governor elections, but you also remember that this could affect voter enthusiasm and turnover rates, and it will give advantage, I think, to the better funded parties, as the finances needed to mobilize voters and extension of campaigns is going to drain the wallets of those that are not as robust. So the much leaner wallets of the weaker parties, of course, is going to feel the drain. But it will be interesting to observe how a more accurate governor election with results efficiently loaded and transmitted hopefully differs, especially in total turnout and patterns of voting from what we had in the previous presidential election.
All right, Bode, we've just got the UK GDP data coming in right now. Any clues on the UK slipping into a recession or not?
Well, it came out earlier in the day, in the morning, and it just managed a positive metric, which I guess means the UK is more likely not going into recession. The pound to dollar actually also went up slightly when the results came out. If you look at the sectors, although the ONS, that's the Office of National Statistics, said the GDP was flat in the 3 months to January 2023, there was a little growth on a month-on-month basis. Looking at sectors, the services sector grew by 0.5% in January 2023 after falling by 0.8% in December 2022. The largest contributions coming from education, transport and storage, human health activities, and arts, entertainment, recreation, all of which apparently came back much, much stronger after falls in December 2022. Output in consumer-facing services grew by 0.3% in January. This follows a fall of about 1.2% in December. According to Darren Morgan, that's the Director of Economic Statistics, the main drivers were the return of children to classrooms following unusually high absences in the run-up to Christmas, and private health providers also had a strong month. Upbeat services may help the UK avert a recession, apparently, but narrowly so. And as the data sets the ground also for the budget, we're going to hear the budget being read by Chancellor Jeremy Hunt next Wednesday. Obviously, he wants to present plans to boost UK economic growth beyond the somewhat shaky situation we have at the moment.
Well, but the Republicans in the U.S. have called Biden's budget reckless as Joe Biden has challenged them on fiscal responsibility. What else do we know?
Well, the Republicans will call anything Biden does reckless. But to tax the rich and cut the deficit sounds somewhat simplistic, but that has always been the formula. Fiscal space has been the recurring theme for leaders all over the world, especially amid households facing pressures from inflation. And the thing I must mention is that taxing the rich will also have an impact on spending that affects low-income earners. However, the 6.9 trillion plan increases taxes on the wealthy and big corporations, and it certainly reflects the president's values, which includes lowering costs for families, protecting and strengthening the social security and Medicare, reducing the deficit by nearly 3 trillion over 10 years, and getting the rich and the wealthy to pay their fair share. The hospital insurance trust fund is somewhat shaky in terms of longevity and being able to find funding. So rather than see it go bankrupt, Biden, I understand, is raising Medicare tax rates to 5.0% from 3.8% on earned and unearned income over $400,000. He's also looking to plug all kinds of loopholes. There is going to be a 25% minimum tax on billionaires, and there are tax breaks for middle class and lower income earners. My critics are arguing that Added taxes, of course, will erode tax competitiveness and will send more economic activity abroad, especially to Asia. But incentives, there are a lot of incentives in the Inflation Reduction Act. Some of this will also be eroded by the higher tax environment. But clearly, the priority is to find money to get Medicare back on a stronger footing and to finance the agenda of the president. This is a very important year. As you know, the elections are going to be close. But the fight is going to be fierce, and the fight provides the right kind of political theater that plays well in the time just close to elections. So compromises will be struck. We'll get a mid-ground between the extreme positions. Billionaires will continue to find their loopholes. So I don't expect any material changes here.
Bode, we'll come back to look at more on the markets as the New York Stock Exchange opens.